Good afternoon to all, or morning, depending where and when you're listening. This is Andy Hoffman, Marketing Director of Miles Franklin Precious Metals in our 28th year in business, with a special podcast discussion with my good friend Bix Weir of RoadToRuta.com. Bix and I have been comrades in gold arms since our early days of contributing to the GATA website, well more than a decade ago. And today, more than ever, we believe precious metals to be one of the best, if not the best, ways to protect yourself from the political turmoil, economic deflation, and currency destruction that must inevitably continue in accelerating fashion as history's largest, most destructive fiat Ponzi scheme implodes. Bix and I are both well-known and highly outspoken opponents of mainstream investments like stocks and bonds, which are historically overvalued and upwardly manipulated, as precious metals are undervalued and downwardly manipulated. Moreover, we both are strong proponents of cryptocurrency, in the sense that we believe the loss of confidence in global governments and the central banks that have destroyed their currencies will cause the multitudes to seek non-government issued, decentralized currencies as future forms of money, which thanks to modern cryptography technology is no longer a pipe dream. For years I have questioned the practicality of future gold standards due to this very reason, i.e., no matter how reliable gold is as a store of value, a gold standard requires trust in the government administering it, to not cheat on its rules, as the U.S. did when it unilaterally reneged on the Bretton Woods Agreement in 1971. Historically, governments have destroyed every gold standard they've established for the same reasons they've destroyed every fiat currency regime, i.e., fraud, greed, and the lust for power and ill-begotten wealth. This is not to say we are specifically recommending speculation in highly volatile tokens like Bitcoin, Ethereum, and other altcoins. However, per the title of today's podcast, we aim to discuss their investment risk versus reward profiles, compared to the historical bulwark of wealth storage, precious metals, and what the evil troika of Wall Street, Washington, and the fake news mainstream media would like you to invest in, financial assets such as stocks and bonds. To that end, let's start by welcoming our esteemed guest, Bix Weir, whose long-standing subscription service can be sampled via the multiple free podcasts he has been producing lately, which you can sign up for at RoadToRuta.com. Bix, welcome to the show.
Hey, Andy. It's good to talk to you. I was just thinking when you were talking, we do go back over 10 years in this stuff, don't we?
Yeah, it's actually, I'm going to hit my 15 years since being in the sector in May, and I think you were there before that. And I do recall when I first came across GATA in roughly, 2003, you were already there.
Yeah, I started with Bill, and it was about 2000. I think he started the website in GATA, I think in 98 or 99, and it made sense what he was talking about. Well, of course, we knew nothing about manipulation back then. We thought it was the big banks like Goldman Sachs, and we didn't even know about the federal government involvement or anything like that. So a lot of things had been learned since then.
Yeah, back then in 99, I was in the heart of my Wall Street career at Solomon Smith Barney. I couldn't even imagine how much my views would change of the world, or that the world could possibly change this much in such a short period of time. But anyway, here we are today, and the reason for this call is multifold, given that in my view, global financial markets are at an historic inflection point. In historically rigged Western markets, we have never seen such egregiously high valuations in both stocks and bonds due to unprecedentedly blatant central bank support, both overt and covert. Which I might add, your hilarious must-see Popping Bubbles podcast from yesterday highlights loud and clear. Which I kid you not, right in the middle of it, YouTube interrupted with an anti-government ad featuring Trump's soon-to-be infamous campaign speech, in which several thousand Dow points ago, he proclaimed markets to be amidst a big, fat, ugly bubble. I'd include real estate in the discussion too, given its own historically high valuations, which are entirely dependent on historically low interest rates to be maintained. Not to mention actual economic cash flow, which based on corporate earnings, cumulative debt levels, and government tax receipts are decidedly not rising. However, given its illiquidity, we'll start by simply discussing stocks and bonds. To that end, my first question, Bix, to ignite today's discourse is the following. Do you disagree with my assessment of historically overvalued stock and bond prices, particularly here in the Western world? Moreover, do you believe such valuations can be maintained indefinitely, even with the full firepower of the central banks and their printing presses behind them?
Well, I don't think it is reliant on printing presses or money creation. I think stock markets, bond markets, all markets are controlled via computer manipulation and derivatives. So yeah, to control the dollar, you don't need a central bank printing them or stopping to print them. All you need is derivatives, which is exactly what is being traded in the just hundreds, thousands of times the underlying asset these days. And I just posted a video on this. And I go back to the beginnings of computer manipulation, who invented these electronic assets and how the rehypothecation of assets in the exchanges is just unimaginable these days. The amount of trades that go on vis-a-vis the underlying assets. And it's not only the stock market, it's gold, silver, dollar, oil, you name it. There is no kind of stopping it until it all stops. Until, somebody takes the delivery of the last piece of silver, last piece of gold. So, yeah, I agree that they're completely controlled and rigged by Steve Mnuchin, at the head of the Treasury, because he was the computer market rigger at Goldman Sachs. He was head of IT at Goldman. That's why they put the market rigger in charge of U.S. Treasury. And, I don't know how long Trump will allow this to go on, but, there are other problems in Europe, I think, that'll force the hand of the market riggers.
Well, I'm dying to know what kind of orientation process one gets. It's not like Steve Mnuchin has had months and months to prepare for this. He, as soon as he gets initiated, the next thing he's in, and obviously, someone's got to brief him on this stuff. But given that the stuff goes on, it lends to the fact that there's definitely a chain of command that makes sure this happens. And, and people, what Bix is talking about, a video he just did showing how just on the COMEX alone, the amount of paper silver traded in 2016 was up an incredible 40%. 40% in 1 year. And that was a year that silver actually went up a little bit. That's how much is required. And as we speak right now, again, silver's up again this year, but the so-called commercials, which is really the U.S. government, have another record short position because it takes more and more of this paper to stop the physical market. So Bix, while we're on this topic, yes, the derivatives can fix things forever, but there's obviously a difference between fixing paper markets like stocks, where there's really no limit to how many shares can be bought, versus the commodity markets, where there's a limit to how much oil you can buy, you can deliver, or gold that you can deliver.
Yeah, you're exactly right. And a lot of people have been saying that's how this manipulation will end, when the last physical delivery is taken. But because the majority of the world is not aware that we don't have free markets, they aren't running in to take delivery of their gold and silver and stock certificates, for example. They believe in the system too much. So it comes down to the moment that the last share is traded or delivered and the last ounce of gold and silver is delivered, that people will not believe in the system, will go running to their brokerage house, to their exchanges, and say, I want delivery of this thing I bought. And the brokerage house will be closed for business. And it will be very sad, and then everybody else will kind of storm their banks, and those will close even faster.
Well, as we'll get to at the end of this conversation about cryptocurrency, one thing we've learned in the last few days, certainly with the scaling debate going on, is the amount of information asymmetry certainly going on in that world. And I think the same can be said here when you say that most people have no idea about what's going on. I agree with that completely, and I think the biggest reason they don't know what's going on is because they respond primarily to crisis. Now, again, we haven't had a financial crisis in a long time. It's been 6 months since we had a 1% down day, and it's been more than a year since we've even had a 10% correction in the stock market, because these, as we said with the silver, there's more and more paper derivatives that have to be utilized, or computer derivatives, just to keep the game going. But there is the information asymmetry because of what's going on the internet, and a lot because of Donald Trump's coming into office is making people understand this, especially because, again, just like the physical markets break from the paper markets, the split between Main Street and Wall Street is getting wider than ever before. And that's why I feel encouraged, especially with all these elections, that information asymmetry is going to be as big of an issue as the asymmetry between physical and paper demand, for instance.
I agree, and it's all about information. And in the past, the mainstream media controlled the information. Now that's changing. You know, with all they're the ones who started the fake news meme, and it's kind of backfiring on them as Trump yells at them, "Fake news, you're fake news, you're fake news." Did an amazing job of taking that label of fake news and putting it out into the ether as nobody even knows what fake news means anymore. Whereas if you say conspiracy theory, people automatically shut down. And that's what they were trying to do with this fake news stuff, with, you know, Pizzagate and all this new information coming out about the conspiracies within government. They tried to label it, but the Trump administration has flipped that back on them. And now fake news is used all over the place, labeling mainly mainstream media as fake news. So it's really interesting how the tide is turning on the mainstream, who's controlled by the deep state, in my opinion.
Right. If there's one thing that Trump has succeeded in, because look, it's not about policies. Nothing we knew from day one. None of these policies were going to get done. He's simply there because people are pissed, and he's promising things that can't be done. But the one thing that he's going to be remembered for, aside from generally speaking, shaking up the system and taking out some very bad people, is that term, well, the two terms, rigged and fake news. Because now, as you said, anytime someone hears the word rigged, they think in their head markets are rigged. And anytime they hear news, they think fake news. Like I just saw it today, just on Zero Hedge, right? It says Gallup poll comes out saying that Trump's approval rating is plummeting. He has only 37% approval and 58% disapproval. But the first thought is, I go, okay, well, I know it's Gallup. They're theoretically unbiased. I don't think they're like tied to George Soros or something. But I can't believe anything. And that's what he's brought to the table. No one believes what they are being told anymore.
It's because they were lies mostly before. And yeah, it's a great thing for humanity to start to question their television and their rulers and their, especially Congress. I mean, Congress opens their mouth and everybody is just shocked at, they've been saying the same thing for years, lying through their teeth and, promoting their agenda, but nobody was awake to it. And now every time they open their mouth, you go, oh my God, what are these people saying?
Yeah. Well, we're going to learn that in spades in the next few months when the, Obamacare repeal replace goes nowhere, when the tax reform goes nowhere, where the stimulus program goes nowhere, and oh yeah, we have the debt ceiling crisis. So,
and throw on top European bank implosions, Deutsche Bank going down, European sovereign debt going down. It's all coming.
Yeah, and it's coming soon. So, to that end, next up. So I think we both agree the risk reward for financial investments is probably as bad as it's ever been, unless of course you want to believe that the powers that be can manipulate markets forever. Let's just end it at that.
Or if they want to manipulate them forever. The U.S. is pretty much in charge of that game, and we're the largest debtor nation, and China's kicking our butt right now. Mm-hmm. Now, if there ever was a time for them to stop the manipulation that would be good for the United States, it would be right now.
Mm-hmm. Well, it's not going to end well, and that's the whole point, because in real terms, financial assets have never had a worse risk-reward profile. So, next up, the topic you and I, have discussed ad nauseum for 15 years running regarding the risk-reward profile of physical precious metals. Not paper PM investments like mining shares, ETFs, closed-end funds, and gold and silver futures and options, which in both of our very staunch views are extremely high-risk ventures. But to the contrary, physical gold and silver, which, when held without leverage and stored wisely, have none of the operational, transactional, or systemic risks of paper PM investments. In my view, precious metals have never been more undervalued, even going back to the beginning of the bull market at the turn of the century. As whether one measures the quantity of money printed, the amount of metal mined and above ground available for sale inventories, the level of global demand, or the ominous political, economic, and monetary backdrop of today's world, it's patently obvious that gold and silver, if not for historic cartel suppression, which with each passing day becomes more obvious to the investing community, prices would be dramatically, if not exponentially higher. Thus, Bix, I ask you what your worst case price scenario is for gold and silver over the course of 2017, given the aforementioned fundamental issues, Conversely, what is your most likely scenario for the remainder of the year? And if it involves rising prices, what would it take to break the cartel's grip on the trading range it has held gold and silver in since they both bottomed at the end of 2015?
Well, I'm on a little different path in that I don't think it's a trading range when 99% of the trades are the same entity trading it back and forth with each other. Mm-hmm. The Treasury, the Fed, and the bullion banks. That's how they play the game with derivatives. So I wouldn't call it a trading range.
But they have held the price roughly between 11 and 12.50 for a while now.
They can, with a click of a mouse, they can hold it anywhere they want, truthfully. So yeah, I'm not real concerned about price. I'm more anticipating the breakdown of the system and how gold and silver will react to that. Because I do see that coming this year with the European issues, with, what's going on in the United States. Clearly, there is no hurry to solve the problems, even if there is a solution, which I don't think there is. I think the U.S. is pretty clearly looking to destroy the dollar in the near future. Near future meaning this year. And if it coincides with what's going on in Europe, the breakdown of the European banking system, the EU, and everybody leaving the euro, gigantic problem for our biggest banks because they own trillions in derivatives associated with European country debt and all kinds of European debt based off the euro. So the ultimate conclusion is I do think that we will have another banking collapse a la 2008. It will go to Congress with Steve Mnuchin will go to Congress with a bill for $20 trillion this time, not $700 billion. $20 trillion to say either you bail us out or the banks will collapse and everybody will lose everything. I do not see Congress bailing them out this time. So where does that leave gold and silver? I think extremely valuable. I can't give you a dollar amount because most likely the dollar won't even be trading anymore with the collapse of the banking system and the derivatives. So you won't have a market to really look at until things are fixed. A market for the dollar, a market for stocks and bonds, a market for gold and silver. Everybody who is involved in the industry now will be saying, oh my God, thank God I have gold and silver. And I agree with that. The ratio between gold and silver, I think will change dramatically. I think, there's a lot of secrets in gold that need to be revealed, and the manipulation in silver and gold, but mainly silver, needs to be released. And I'm looking at a ratio of at least 10 to 1 from the current 70 to 1, probably closer to 1 to 1 in the most extreme snapback from this manipulation. So yeah, no doubt in my mind, gold and silver will be beneficiaries of a collapse of the type that I think is looming.
Right. And as we're seeing, for people who think that they are winning, there's a lot of these, let's call them PPTs, that are losing. Clearly the oil PPT, which in many ways can be considered the Saudi Arabia petrodollar Saudi Aramco PPT, is failing. The Deutsche Bank PPT, as we saw this morning, is clearly on the rocks. And
they're back on the rocks.
Yeah, and much of the Euroland in general PPT is falling apart. So, I don't think it's going to be very long before something really big hits. It may very well be, if I had to pick a guess, it's between May's French election and the Greek, debt payment that's due in July, but it could be so many other things. And, when we talk about the risk reward for gold and silver, forgetting the other issues, which you're suggesting, I just need to remind people of the fact that, again, people are talking about, like in the Bitcoin world, what's the cost of mining a Bitcoin, and it can go down here and here. Look, the cost of mining gold and silver is above the cost of the price right now. And when you talk about the all-in cost of producing it, as in, to explore and develop it over time, it's way above this price. It's probably well above $1,500 for gold. It's probably above $20 for silver. And the proof in the pudding is that reserves, at least the gold numbers I've seen, are down 40% in the past decade, and production now for gold is expected. It already peaked and it's expected to fall 25% in the next decade. Now silver It's a little harder to get numbers because it's usually a secondary metal, but it's pretty obvious. I mean, we know that silver production peaked last year just like gold, and I'm guessing that it's going to do the same thing. So there's only so much silver out there. There's very little that's able to be produced compared to what used to be, and the costs are much higher. And of course, because of the cartel, what they've done to prices, there's no incentive to produce it or capital to do so. And of course, there's also technology that's required because this is much more difficult than the low-hanging fruit we did produce in the past. So again, you want to talk about a worst-case scenario. It's just not that low. It's maybe a few bucks from here. And if it has to do with anything like 2008 or 2013, what happens? The physical gets sucked up, and then you have two different markets. So I don't really see. Honestly, first of all, I don't even see a scenario which could make people dump gold and silver. And if they did, it wouldn't go far. And if that happened, we'd suck up all the supply. So, and by the way, I do agree with you 1,000% about the gold silver ratio. I know that you personally believe that there may be more gold out there, than is purported. Even though I think we both agree that even if that were the case, there's still way more dollars reported, than are reported.
And derivatives of dollars.
And derivatives. And of course, we both agree either way that the gold silver ratio needs to go down. You say 10 to 1 or lower. I've said at least 15 to 1 or lower. And it may very well go to single digits, because it is the people's money and because there's really a lot less of it out there. So I think what we're trying to say is, people, from a risk reward standpoint, I say gold and silver, both. Bix says silver definitely and gold a little less, that you couldn't have a better risk reward ratio. Do you agree with that?
That is exactly true. And I would caution people in my scenario where we do have a banking collapse and that would highly affect, all exchanges, the, derivatives of your mining stocks with 10, 20 people claiming ownership of the same share is going to throw that into massive havoc as well. So if you don't own the physical stuff, you might want to think about it now. I know you're into the mining stocks for the leverage, but the leverage in a banking collapse will turn on you in a moment, because it's still a paper contract with many people and problems between you and your wealth.
Absolutely. And, I'm not going to harp on it, but people know very well I sold my last mining stock 6 years ago after working in the mining industry for 5 years. And look, again, if you want to speculate on paper PM investments, that's great. There was a short period of time for 6 months last year where it was amazing, but there have also been many other periods where it's not been amazing. And so it really depends on your risk reward profile, for the different investment classes. Because to me, mining stocks and gold and silver physical are two completely different investment classes. Okay. Last but not least, the topic that quite frankly catalyzed today's special podcast, cryptocurrency. Okay. The reason being that Bix and I, along with Jeff Berwick, have been the most outspoken supporters of Bitcoin in the precious metal community, going back well more than a year ago when the price was still below $400. Again, neither of us are financial advisors, although we know just as much per se. So we are not recommending specific investments in the space, be it Bitcoin or any of the multitude of competing altcoins. To the contrary, we are simply trying to highlight Bitcoin's relative risk and reward profile, particularly now that it itself faces a potentially historic inflection point in its near future, with no pun intended, a fork in the road. To wit, whilst Bitcoin's growth in both user base and price has been exponential in recent years, to the point that it is starting to creep into the mainstream, the technology underlying such growth is amidst a major, potentially massively divisive political war, otherwise known as the scaling debate. While Bitcoin has been able to successfully stave off and rapidly bypass multiple systemic threats in the past year, from the Bitfinex hack to Chinese capital controls and last week's SEC rejection of the Bitcoin ETF, it is yet to encounter a threat so powerful as the potential forking of its chain by a group known as Bitcoin Unlimited, which, unlike the Bitcoin core group that seeks to scale Bitcoin in a slower, more methodical way, believes Bitcoin's best chance at monetary dominance is an immediate increase in processing speed, which in the process will break the Bitcoin chain in two. I imagine this topic will be far more interesting to discuss, as unlike stocks, bonds, and precious metals, there are far more variables to consider when determining Bitcoin's short and long-term prospects. And while the differences in our views regarding the aforementioned asset classes are relatively minor, they have been significantly broader in the highly volatile, rapidly emerging cryptocurrency space. To date, we have both been vehement believers in Bitcoin's near-term price prospects. However, the dramatic escalation of the long-simmering but until now dormant scaling debate issue, which unquestionably is why Bitcoin plunged from 1260 last Wednesday to a low of 940 on Saturday, and it sits at about 1040 as I write, has made Bitcoin's outlook more uncertain than at any time since the Mt. Gox crash of 2014. Thus, Bix, let's start the discussion with how you believe the scaling debate should be resolved. And if that route is taken, what do you think the potential swing in Bitcoin's price could be, as well as the impact on its global uptake and the reputation of the cryptocurrency space as well?
Well, I would have to say that with your introduction, you make it a lot more dramatic than I believe it is.
And I'm not trying to.
I know, I understand. I've been through this so many times in the years I've been in it. I rode through the Mt. Gox. Mt. Gox is a hell of a lot more scarier than this is. But my take is it probably won't matter. With the things that are coming down in the economy, the decision will be made by what can be implemented the quickest for use as Bitcoin as a utility. That's what we're going to need Bitcoin for. And I know to me, that's the guys from Bitcoin Unlimited who want to do the hard fork and basically increase the size and make it cheap. The key is when this financial collapse happens, Bitcoin will be one of the alternatives if it is fast and it is cheap and people can use it for day-to-day transactions. If it is not fast and cheap at that moment in time, you can kiss another 10, 15 years of adoption of Bitcoin goodbye, because the bankers will adopt they'll put forward a solution and there will be no other solution. So yes, I am 100% in the camp of the Bitcoin Unlimited guys, and I understand that the best core programmers are with SegWit and all that. My take would be, if they're so smart, why didn't they invent something that maintained the utility of Bitcoin? Why would they take apart its most important feature by pushing the cost up of individual confirmations and transactions, potentially up over $100 per transaction? That is an insane thing to do for such a smart group of people. So yes, I am 100% in the crowd that hates that these really smart people are taking this path of taking Bitcoin out of the hands of the people at the time they need it most.
Right, and I think the way that you're putting it, it's not that I am disagreeing. And again, the main purpose of this call to me is for people to understand the risks, because yes, there's, as you know, you did that excellent podcast the other day about the morality of Bitcoin, because again, people need to realize that people are in it for different reasons. Like if you're in Venezuela, you're in it not to consider it digital gold. You're in it because you literally think it's the only way that you'll have something to spend with. So, you know, aside from that, and by the way, I too was involved in Mt. Gox. I'm proud to say I lost, I don't know, about $1,000. I can't remember. It was a long time ago. But all the things that you talk about, I am not even going to reserve judgment as to which is right. Because I think you believe that I don't think I like how Roger Ver is doing it, the Bitcoin Unlimited. I think that there's a bit of trying to commandeer the system, and there's negotiations with the Chinese government, which are perfectly fine. I don't think I like the method, but I'm not saying I disagree that what they're doing may or may not help. I think, you know, also, what I do disagree with is kind of the characterization of the core as not being proactive. I think it's a very complex technology that neither you nor I nor probably 99% of the people involved in it understand. And just coding it to keep it going is a issue. And I think it's in many ways been a victim of its own success, because it's grown so fast, it's bumped up against the scaling issue. And while it's been extremely stable and it's developed this characteristic as digital gold, it has in fact limited its ability to move forward with, theoretically, as you say, what Satoshi wanted it to be, the money of the people. Because I think it's right now, I'm not sure you characterize it as too expensive, but clearly it can't go along this path and become a currency of the people, because it will just be too many transactions that'll take too much time and cost too much money. So here we are. We need to do something, and I'm just explaining that for people. The Bitcoin Core, which is the current chain, these people, they basically are trying to introduce layers of technology that allow a slow but steady growth of the processing speed without forking the chain, meaning creating two chains. Whereas Bitcoin Unlimited believes that there's a sense of urgency, and they want to do a major upgrade of the software, which creates two forks. And like what happened with Ethereum last year, but for different reasons, that people will decide which is the dominant fork. They believe that theirs will be better. Bitcoin Core, which, as you said, has a technology called SegWit, which is a layering technology, they believe theirs will be better. And of course, from an investment standpoint, forgetting all of these arguments, I think everyone would prefer, including yourself, if we could figure out something that would not cause a fork and cause the uncertainty, but it seems like it's inevitable. Do you disagree with that? And do you agree that if there is a fork, that there's very likely to be some significant price volatility in the near future?
I would say a few things. I think a fork is the most likely thing to happen because the Chinese miners can make it happen. They get to vote. And it is gaining popularity. But remember, Bitcoin Unlimited came about not because it was the number one decision on how to go forward. It came about because the guys at the Bitcoin Core were designing something that took away a very important utility from Bitcoin, and that is the ability for the individual to use it for day-to-day purchases. That's the only reason Bitcoin Unlimited had to come out and say, all right, we're going to do this fork against the will of the core programmers. So, I mean, I don't know why the core programmers decided to take away this extremely, in my mind, the number one feature of Bitcoin, the ability to use Bitcoin for daily small transactions for the people. And that's exactly what will happen with SegWit if it costs more than $1 to buy a cup of coffee in fees. And that's exactly what will happen with SegWit over time. And it's not a long-term solution, whereas had they included the utility aspect of Bitcoin in their programming and looked at that as the number one reason, not the fundamental investment properties of Bitcoin, but the utility, the highest and best use of utility, in my mind, when the banks crash, is going to be for day-to-day use. And they didn't take that into account, and that's why Bitcoin Unlimited had to come out and say, hey, here's another way. Let's just, let's make it unlimited. Let's double the block size right away and right. Put a major fork in there.
Right, but I would disagree that the core group has any kind of will to change philosophy. I think as my belief is, as I said before, it's such an incredibly complex project that's growing so fast that it's very difficult for anyone to keep up with it. And in their view, SegWit is a road to having cheaper prices. They believe that it is effectively a block size increase, which you can layer other technologies. There are ones called Lightning Network and Tumblebit that they believe will afford the same kind of exponential growth and therefore reduction in processing size. Not as quickly as if you just forked it and had bigger blocks. So it's really just a matter of status quo versus something that's more dramatic. Which one will be the right one? I don't know. And that's why I'm trying to take the politics out of the, Roger Ver and his group, versus this. But the one thing I will say that I think people need to understand, it was a catch-22 from the beginning, because the whole idea of Bitcoin wasn't to be the money of the people. It was to be a decentralized form of currency, which can be used as money of the people. But the problem is, in order to have the speed of processing that enables the cheap transactions, you have to have small blocks because as we've learned, and I don't know if Satoshi understood this in the beginning, but certainly we realize it now, is that the larger the block size get, the more centralized it gets because then you have these giant mining pools in China. And again, China has the cheapest electricity in the world, so it makes it a lot easier to have that processing capacity. So it is a catch-22. I don't think any side of this argument has done the wrong thing. They are viewing Satoshi's beliefs in different ways. And that's why we are coming to this, as we say, fork in the road. So, I mean,
I would disagree on the Chinese concentration. Yes, right now, and as far as we know, the plans for the future in China are to be the dominant player in mining. That will change over time as other countries understand that Bitcoin is a unbelievable technology for the future. The United States government is going to build gigantic Bitcoin mining facilities also in every country around the world. So just because China's first doesn't mean it's going to have the concentration in mining capacity. I think every single country in the world is going to build their mining capacity because it will be the money of the future. It would be one of the choices, and it would be a darn good choice if you ask me. So I'm not worried about the concentration of mining in China.
Right. And these are definitely what I'm talking about, short-term politics. What you're talking about is long-term, because if in fact Bitcoin, whether it's Bitcoin Unlimited or Bitcoin Core or both, or those plus others are going to be the future, all those things will play out. Obviously, it's kind of like, if the cartel breaks and gold goes up, the price soars and every government in the world wants to be involved. And if cryptocurrency gains market share and fiat currency falls apart, well, every government's going to want to be able to mine Bitcoin. And so again, but for this to end on this call, again, the purpose of this call is risk reward. And I don't even think we need to say anymore other than to let you know, people, that this forking situation, this scaling debate, it is extremely unlikely to end peacefully. It is likely, again, if let's say you have Bitcoin right now and you hold it, right? You are going to get, if there's a fork, both sides. Now, some will argue, well, that's going to permanently hurt cryptocurrency. Some will say, no, it'll be like Ethereum. It'll just, give it a 6 months and the majority consensus will decide which is the better one. Or maybe they'll both be worth something. But the point is, there is going to be significant volatility. There is no way that we're not going to see significant volatility. That doesn't mean there's going to be crashes. But there's going to be stuff, right?
I think there is a way to end this peacefully.
Okay, then let me know.
And it won't be done by either side either. Mm-hmm. It will be a financial collapse or hiccup in the global monetary system that the people there won't be time to implement SegWit. There just won't be time. Even the Bitcoin core developers, on a monetary crash where the banks go down, everybody loses everything, they will see very clearly that it has to happen as soon as possible.
Well, look, if that happened, again, for people who are listening to this who own it or are considering owning it, if that were to happen, you're fine either way, because if it's forks, you get both points.
I think you're fine. I think you're fine either way. I don't.
Because remember, if you have the coin and the forks, you get both. So you can either keep them both, or you can decide I choose one and sell that one and hold the other one. But the point is, you're talking about and I'm not even saying a wild card. It has to happen sometime, but it may not happen right now. And if it doesn't, be wary, people. It's going to be a lot more volatile than gold and silver. But in the big picture, I think people get from this call that we both believe strongly in cryptocurrency. It's just that it's not this is a brand new technology and it takes a lot of time and a lot of politics. There's no more politics in gold. Gold is what it is, right?
If you're looking to make big bucks, silver's the call. I mean, silver's been manipulated and held down for, I would say, I could argue 150 years, whereas Bitcoin is, a lot of the manipulation is gone with the closing or the, basically, the shutdown of removing your Bitcoin from the Chinese exchanges. Those volumes went to almost nothing, so it's fairly freely traded. Silver and gold are not freely traded, so if you're looking to make money in this game, silver.
Yeah, I would say of all the assets we've talked about in this call, that silver has the best reward to risk profile. we probably would differ on the amount of reward to risk in gold just because of our personal beliefs, but I think we both put it above Bitcoin in the fact that, there are a lot more risks in the near term to price than there are in gold and silver. And then, of course,
it's that both gold and silver have been manipulated for decades.
That's right.
And
Bitcoin
there's
is not,
a lot of,
not as much.
Not as much. There's a huge learning curve that still has to go on in Bitcoin and cryptocurrencies. So I think if you're looking to, where should I put my money to make the most money? Physical silver, no doubt, hands down. That's going to be the spot, and you'll be lucky when the system falls apart. You'll be lucky to get some.
Okay, well, I think we'll end it at that.
On that note, buy your silver from Miles Franklin right now.
Yes.
Call him up and buy.
Yes, Miles Franklin blog is writing every day, trying to educate. Hopefully, you'll consider us for your gold and silver and platinum sales purchases and storage, and of course, go to roadtoruta.com. I think Bix has become one of the more compelling personalities in the alternative sphere, which he's been, crossing over from precious metals to other investments and other topics. And I think, it's very worthwhile, at least to sample. So, to that end, let's end it here. I think we've probably given as much, discussion of this topic as anyone in our